COVID-19 is now the third deadliest pandemic in history, right after the Black Death beginning in 1346 and the Spanish flu of 1918. As of late February, global counts of deaths from the virus have surpassed 2.5 million. In total, there's been more than 112 million recorded cases. The U.S. alone makes up 30 million cases and more than 500,000 dead. It's been a challenging 12 months, to say the least. Americans have weathered through the unknowns of a new virus and months-long lockdowns that closed thousands of businesses and brought communities to a standstill. But with spring on the horizon and vaccinations rolling out across the country, some are seeing a light at the end of the tunnel. Yet with this comes many questions. What will post-pandemic life look like? How has the economy been affected by this instability? And will businesses bounce back?
People look down at their nose at small and medium-sized business. This is your bars, restaurants, dry cleaners, nail salons, gas stations, boutique shopping, etc. It's like, oh, you only have 20 employees or you only have 10 waiters in your restaurant. Who cares? Well, first of all, I care. And if you're the one who got laid off or you own the restaurant, you care. But those small businesses, in the aggregate, are 50% of all jobs and 45% of GDP. It's about half the economy. And they're being crushed by the lockdown.
That's James Rickards, a longtime economist, lawyer, and author of The New Great Depression, Winners and Losers in a Post-Pandemic World. Rickards says that the Paycheck Protection Program helped businesses stay afloat, and the stimulus checks aided Americans. But when it comes to the health of the U.S. economy, what's the perception versus the reality?
Economists like to use the R word, recession, 2 or more consecutive quarters of declining GDP. They don't like to use the D word, which is depression, because it's more subjective. It's not as quantitative. But that's too bad because we're in a depression, and people need to understand what that means. Depression does not mean continuous declining growth. You can have growth in a depression, but it's depressed growth, meaning it's below trend. So if trend or potential is 3.5%, and you're growing around 1.5% to 2%, which we will be best case, that's depressed growth. There's an output gap there where you're leaving trillions of dollars of potential output on the table, and you're not keeping up with the debt, and things are getting worse. Even though you're growing a little bit, things are getting worse. Depressions can last 10 years. They can last even longer than that, and that's where we're in today.
Because the term depression is subjective, some economists disagree with Rickards. Many argue that the U.S. is simply in a pandemic-induced recession, but will recover fully as millions more are vaccinated. As this unfolds, one key economic figure to watch is unemployment. According to the Bureau of Labor Statistics, the unemployment rate as of January 2021 is 6.3%. This pales in comparison to April 2020 when it shot up to 15%. However, it is still higher than pre-pandemic America. Despite the fact that unemployment has steadily improved, Rickards argues that many Americans, working or not, are still trying to keep their heads above water. He says that many are not outright spending their stimulus checks, but instead paying off existing credit card debt that's piled up during the pandemic, or are putting the money towards an emergency fund.
That can be a good individual decision. I'm not against savings, but 70% of our economy is consumption. They don't know how it's going to end. It could be inflation. It could be default. It could be higher taxes. There are a number of responses, but they're all bad. And so people save more to get ready for that.
With the massive spending on pandemic relief and the Paycheck Protection Program this past year, some economists are also worried about the country's increasing debt in comparison to the economy's output, referred to as the gross domestic product, or GDP.
If you take the total amount of debt, which now is over $25 trillion, and divide it by the economy, which is about $22 trillion, that's called the debt-to-GDP ratio. Well, up to about 90%, a 90% ratio, if you borrow $1 and spend $1, you can probably get $1.10 of growth. You get a little bang for the buck. But once you go past 90%, it goes in reverse. Now you borrow $1 and you spend $1, but you only get 90 cents of growth or 80 cents of growth. In other words, you don't even get $1 of growth. Well, that critical threshold, that through the looking glass, if you want to think of it that way, is at 90%. The United States is at 130%, 130% debt to GDP. Who else is in that category? Well, Lebanon, Greece, and Italy, the super debtors club.
Although Rickards says that this level of debt has catastrophic implications, there are clashing opinions in the industry. David Wessel, a senior fellow of economic studies at the Brookings Institution, writes that it's still unclear what the impact of national debt is on the success of the economy. The financial health of the U.S. is a complicated machine with many moving parts. However, one common myth that can be easily debunked is that the stock market mirrors the economy.
The stock market is completely detached from the real economy. I've got trading screens I look at all day. I know the stock markets are at all-time highs, and people's 401ks have come back from the lows of last March. I mean, I get that. But that's not the real economy. First of all, most people are in index funds. And if you're in an index fund, it's going to be based on the S&P 500 typically. There are a couple others, but they're mainly S&P 500, the fund you buy from, whatever, Vanguard, Fidelity, Federated. They're key to the S&P 500. Well, it's not really the S&P 500 because there are 7 stocks that dominate the index, so 40% of the market cap of the index. And they're the least affected by the pandemic. And we know what they are. It's Apple, Amazon, Facebook, Google, Netflix, Microsoft, and Tesla. So it's 7 stocks that are taking the whole stock market higher. But that's not the real economy.
Rickards adds that the stock market is not a good predictor of what's to come. And this is evident through some key moments in history.
The stock market did not see the dot-com crash coming. It did not see the 2008 financial crisis coming. It did not see the 2020 pandemic and market crash coming. The stock market never sees anything coming. They pretend that they do, but they actually don't, and their track record in terms of forecasting is very bad.
So, what can people do to be better prepared for potential economic downturns? Rickards points to greater investment diversification and the ability to pivot quickly if markets shift.
Number one, have more than the usual amount of cash, not 100%. You need to be diversified, but maybe 30% of your investment portfolio in cash. People go, well, cash has no yield. Well, that's true, but if we have deflation, which I do expect, the real value of cash goes up because your purchasing power goes up. And it also gives you can be nimble when you get a little more visibility. Right now, visibility is very poor because there's so much uncertainty, but that'll change over time. And as we get better visibility and you say, here comes inflation, I need to be in gold, or the economy's coming back, the vaccines work better, so I need to be in stocks. Well, if you have cash, you can do that. You can be the person who pivots. But if you're in all these other investments, they can be hard to get out of. So maybe 30% cash, 10% gold or gold mining shares, not 100%. You need to be diversified, but a 10% slice in gold will serve you very well.
To find out more about this topic, links to additional resources, and our guest, James Rickards, visit viewpointsradio.org. Also check out his book, The New Great Depression, available online and in bookstores now. For more behind the scenes, search Viewpoints Radio on Twitter and Facebook. This segment was written and produced by Amira Zaveri. I'm Gary Price.
Two nationwide surveys find that discrimination is a significant barrier to care for people with Alzheimer's and dementia. Half or more of non-white Alzheimer's caregivers report they face discrimination in navigating health care for their recipient. Dr. Carl V. Hill is Chief Diversity, Equity, and Inclusion Officer of the Alzheimer's Association.
The data suggests we have a long way to go to address lack of health equity in healthcare. More than 80% of non-white racial and ethnic groups say it's important for Alzheimer's care providers to understand their backgrounds and experiences. But fewer than half of Blacks and only about 60% of Hispanics and Asian Americans feel confident about their access to culturally competent providers.
The surveys also reveal a lack of trust among Blacks in research clinical trials, and half doubt that advances in Alzheimer's treatments would be shared. These findings are part of the 2021 Alzheimer's Association Facts and Figures Report. Find out more at alz.org/facts.
Did you know 1 in 4 small businesses will close due to cash flow difficulties or lack of access to capital? But they don't have to. According to Lauren Schifrin of Revolution Capital, the country's leading provider of factoring and cash flow financing, there's a safe and easy way to access your capital immediately without hurting your bottom line.
It's called factoring. We buy your invoices and pay you same day. That provides you with the immediate liquidity and access to the capital you need to grow your business. Because now more than ever, companies should have a finance partner that's on their side.
Revolution Capital provides flexible funding options to small to medium-sized businesses that would like immediate access to capital, and they respect your business relationships to help you succeed and grow. Find out more at revinc.com. That's REVINC.com.
And that's Viewpoints for this week. Viewpoints is a production of MediaTrax Communications. Follow us on Twitter, Facebook, and Instagram to learn more about upcoming shows. And find a library of past programs on Apple Podcasts, Google Play, and Spotify. Plus, you'll always find previous segments and more information about our guests at viewpointsradio.org. Join us again next week for another edition of Viewpoints.
Coming up on Viewpoints.
One of the things that can be really destructive isn't so much what you say. If you say it with contempt or disgust or disdain, that real dismissing way, that's one of the things that can be pretty dangerous.
How do you handle conflict? Then,
sometimes when things like this happen, we're like, oh, I'm a loser or oh, I'm a failure. But I think the idea is that, no, you're a human being and, you make decisions the best you can and you're constantly learning.
The value of grit in life. I'm Marty Peterson.
And I'm Gary Price. These stories in depth on your public affairs magazine, Viewpoints.